Hello and welcome. My name is Martin Jones, and as you can see, I love AAT. I love AAT, and there's a couple of brands that I want to, three brands that I want to reinforce while I do this little introduction. The first is my brand, which is the London School of Business and Finance. This is LSBF TV, and we're using this vehicle of LSBF TV to show you how to do some level 3 AAT tasks, because we love AAT, we know you love AAT, and we want to help you to pass your examinations. So it's actually a green screen behind me, just there's nothing really there, I'm just like a weather girl. But behind the screen that you see now, this blank screen that you have now, is a task that I'm going to work through with you, and hopefully by working through this task with you, it will help you to perform well in your examination. So as I said, there are three brands that I want to reinforce, that was the word I used, wasn't it? And the three brands are AAT, of course I love AAT, London School of Business and Finance, but also me. My name is Martin Jones, and I will be your presenter for the next 20 minutes or so, talking to you about, let's go mini-me, level 3 financial accounting. Now there's a couple of papers at level 3 financial accounting, and as you can see, this one actually references financial accounts itself. So it's financial accounting preparation, FAPR is the AAT code, and this question that you can see just appearing just behind my hand here is a real exam question from 2016, but the AAT have taken the 2016 exam and slapped it onto your My LSBF web page and made this task available for you to practice at home. And it is deliberately the intention at AAT that there's a relatively high degree of repetition of exercises from one year to the next. I think I've said already this is a real exam question from 2016. And this one's looking at ethics actually, and the kind of ethics that we're looking at here from the 2016 examination will help you with the 2018 examination, the 2019 examination. That is the idea, that is the assurance that we and the LSBF can give you. Okay, so should we just start? Right, so welcome, final accounts preparation, final accounts, sorry, my eyes were playing tricks on me. Final accounts preparation as part of financial accounting. And there's the time, just making sure that I'm doing the right thing at the right point. So you are now working on the final accounts of another client. So this is a continuation of a task, and this is the ethics component of, it's actually the ethics component of the task that I was doing with you last week actually. And really nice it is as well. I'll just wake it up, actually it might be better to wake it up with the pen. How's that looking to you? Yeah, that's looking really nice. Your manager is called away unexpectedly. He asks you to undertake a particular task with a deadline during his absence. You know you have not received sufficient training to do this work. This is a difficult thing, and I'm sure if you are working in practice, these questions are often written imagining that you are a bookkeeper working in an accounts practice. If you are working in an accounts practice, you will have come across this problem. I certainly did plenty of times when I was a junior. If you're not working in an accounts practice, it may come as a bit of a shock to the system. But it is unfortunately rather common that the manager will walk in, set you a task that you can't really do. And he sets you the task that you can't really do because he thinks you can, and you say yes because you think you can, and then he walks out the door, he goes off to the next client. It's only once you get into it you think, hang on a second, I'm not sure I'm qualified to do this. So what would you do? Well, let's be honest, in real life these days what you do is you just pick up your mobile phone and you just phone the guy, wouldn't you, is what you would do. What would you do? You'd email the guy and get on with some other work. You would, your manager is called away unexpectedly. It doesn't mean that you've lost touch with him. All right, okay, if he's gone on maternity leave, then that might be a bit of an issue. But if the manager is available, then you're just going to contact the manager and just solve the problem, aren't you? So that's the kind of answer that we're looking for. There is an element of agedness sometimes about these requirements, but this one has that kind of ethics. Just solve the problem. So let's have a little look at what choices we have. Do the job to the best of your ability and submit the work to the client on time. It sounds okay, doesn't it? But it just isn't okay, because if you know that you're going to mess up the job, or at least there's a great risk that you'll mess up the job, then you're just going to annoy everyone by doing the job badly. You can do the job well, you just need a bit of training. So get yourself the training. It's very unlikely that the job has to be done right now. Accounting just doesn't work like that. Speak to him on the phone. If it has to be done today, speak to him on the phone. If it has to be done within the week, email. Exactly. Ask if you may have support from elsewhere in the organisation. Keep reading. Ask a family member who is a qualified accountant to do the work for you. That's got all sorts of problems. The most obvious problem is confidentiality. So it's a little bit dry, isn't it, this scenario? But can I go back up to the top and show you why that one's wrong? Your manager is called away unexpectedly. Sorry, I missed a bit. You are now working on the final accounts of another client. So to get your family member to understand the problem that you have to show your family member the client's records. Now, there is a client confidentiality issue that we have here. We do this work on behalf of the client, and the client says to us that we can look at their confidential records. The client doesn't say to us that we can, look at these confidential records and take them down the pub and show them to everyone. All right, I'm exaggerating a little bit. But you can't go around showing clients' records to your family members. It's like, no, don't do that. That's a breach of confidentiality. So it sounds nice, but no, that's not allowed. Advise the client that the deadline will be missed. Well, you can. That's not. It sounds the most aggressive, doesn't it? But it is actually a reasonable response. But it's not the first response. The first response is, what was the problem again? The problem is we don't have sufficient training. So try and get the training. So you just try and get the training. And in this particular case, the option that is going to give us the extra training is ask for support from elsewhere in the organisation. That's our organisation. So in our accounts practice. So the answer therefore is this one there. The answer is support. And I don't want to rush on, but I think I'm happy with that. So I'm going to go on to the next exercise. And the next exercise, in fact, the last exercise. And it shows you how much crossover there is between subjects. This, as you can see from the top here, is final accounts preparation. And the previous one that I was just doing was advanced bookkeeping. And look at this. This is advanced bookkeeping that we're going to be doing, double entry in a capital T account. Although it's on the final accounts preparation. So if you're thinking of doing advanced bookkeeping and final accounts preparation at the same time, hopefully you can see from what I've just flashed up in front of you that there is a lot of logic in doing both examinations at the same time. They are complementary, as the expression has it. So moving on then to the next task. Here we go. So this is the next task that we're going to look at. This task is about final accounts for sole traders, so not a limited company. You have the following information about events on the first day of the business coming into existence. A sole trader started a business. The business was not registered for VAT, which is great. VAT always drives me nuts. The sole trader transferred 13,000 of his own money into the business bank account. 100 was paid from this account for some office furniture. 900 of goods for resale were purchased. The supplier allowed 1 month's credit. Do you know what? Should we just write down the answer? The question is, complete the capital account as at the 1st of January, showing clearly the balance carried down. What that means is record all of the capital transactions during the 24 hours of the day, and then at midnight on the 1st of January 2007, carry down the balance at 1 minute before midnight to be brought down 1 minute after midnight on the 2nd of January. That's what it's saying in more detail. Fill in the boxes using the relevant items from the lists below. So I'll just go back there again, up to the top. There is, in fact, only one transaction that involves capital. Can I just show you the T account? Maybe I need to really reinforce that. Just go right to the bottom. Can you see there's just one T account to do, see? Just one T account. So the whole answer is to whack some stuff in that T account there. So anything to do with capital, we record it. Anything else, we just ignore. And there is an awful lot of distractor stuff here. Just taking a look at the chat. Seeing everything looks all right. All looking good to me. Yeah, just done a few tests. Wait a minute, am I using my shoulder? No, the framing's all good. Great, excellent. Here we go. You have the following information about events that happened during the 24 hours of the first day of business. And the business was not registered for VAT. The sole trader transferred 13,000 of his own money to the business bank account. This, the reference to the sole trader, putting capital in, that's a capital transaction. So that's relevant to us. 1,100 is paid from the bank for some office furniture. So, sorry, can I just show you this? Maybe you missed that little bit. The sole trader transferred the 13,000 of his own money into the bank account. The fact it went into the bank account is nothing to do with us. But the fact that the sole trader transferred some money in, that's what we're interested in. And the 1,100 was paid from this account, as in the bank account, for some office furniture. Obviously, that's going to affect the office furniture in the bank account. It's got nothing to do with the capital, so we can ignore that second transaction. The third transaction, 900 of goods for resale were purchased. Obviously, that's going to go into purchases, but the purchase hasn't been paid for, leading to a supplier relationship known as a payable. So we're going to recognize a purchase and a payable, which has again got nothing to do with capital. So this purchase has nothing to do with that 13,000. In fact, the only thing that we need to record is this. The money goes into the bank account, and therefore maybe I need to just reverse my hands. When we debit the bank account, then we credit the capital account. So we debit the bank account and credit the capital account with the 13,000. And using my favourite here, here we go. Drive on the left and crash on the right. How's that looking? Yep, that's looking good. So we drive on the left and we crash on the right. So as regards the capital T account, we are going to recognize the 13,000 as a credit balance. We use what is called folio referencing at AAT. Folio referencing is where you put reference to capital when you're in the bank account and reference to bank when you're in the capital account. Folio means page, as in what you do is you reference the other page, is the idea. Clearly these days, of course, all these things are recorded on computer records, but it is still a computer page. So the other computer page that a user using this T account can look at if they want to see the other side of this double entry is the bank T account. So we're saying to anyone using this T account, if you want to see the other side of this double entry, then you will see it in the bank T account. And then that's it. That's the only thing that happens as regards capital during the day. So we add down 13,000 to give us the total, put that in on both sides in the usual way for balancing T accounts. Then we have balance carried down of 13,000, and that's the end of the answer. By the way, the computer will automatically make sure that, let's do another colour, that we have a balance brought down of 13,000 in the new period being the 2nd of January. So for every balance carried down, there's a corresponding balance brought down, as you can see there. That's not required, that wasn't part of the requirement. We were required purely to do today and not to do tomorrow. But I just thought I'd show you that. I was just about to delete that, but before I delete it, can you see that the balance brought down in the new day is a creditor balance of 13,000. What we are saying to the user of this T account is the business owes its owner 13,000. So that's what that says. So we do the business is called the separate entity concept, or indeed just the entity concept. The separate entity concept imagines that the business is separate from the owner. So the business owes its own owner 13,000 is what that accounting sentence is saying. But as just mentioned, the green was not part of the requirement, so I'll remove it. And nor was doing double entry. But I'm looking at the time here and I can see that I do have the opportunity to communicate the double entry to you. So what I'll do is I will record the double entry for you. So should we number them? How am I doing here? Yep. So I think what I'll do is I like this yellow actually. I'll highlight in yellow. So the sole trader transferred 13,000. 1,100 was paid from some office furniture, and 900 of goods for resale were purchased. And maybe I'll call them transaction ABC, might be better than numbering them, because I'm going to be using numbers in the double entry itself. So transaction A, B, C. So transaction A, debit, credit. Let's just make sure I don't run out of space. Oh yeah, I've got plenty of space. So the sole trader transferred 13,000 to the bank account, so that would be debit the bank with 13,000, credit the capital with 13,000, and then B. You'll see now really much more clearly why the 1,100 does not affect the capital, because debit, credit, 1,100 is paid for this account for some office furniture using the generic phrase of property, plant and equipment, PPE. We debit PPE with 1,100 and we credit the bank with 1,100, and it might feel like the next one should have a bank entry, but that's not right because we don't pay the supplier yet. The supplier supplies us with stock, and the stock T account is often called the stock T account, but using the more common word that's used by the AAT, inventory. We have an asset inventory of 900, and we have a credit the creditor. Credit the creditor sounds cute, but I have to admit the modern language of calling this payable a payable is much better. But it's quite nice having both expressions. Have you used that expression in the workplace, creditor? It's good to be a modern boy, a modern girl when it comes to this language, and use of these new phrases, you know, is the way forward when you're communicating with your clients and when you're communicating with your, you know, your fellow staff. So in particular, receivables and payables are lovely words. I really like them. But sometimes it's useful to have the old-fashioned phrase, which is debtors and creditors, because debtors and creditors tell you the sign so much better than receivables and payables. Receivables and payables tell you the relationship, don't they? They're really nice words. So we are able to receive from our receivable, and we are able to pay our payables. I do like those phrases. But the old-fashioned phrases of debtor and creditor tell you it's debit and credit, and I do like that. I do like that. So how are we doing for time? We're doing pretty good for time. Just make sure everything's cool. Yeah, everything seems to be good. Excuse me. So what I think I will do with the remaining minutes, if I may, is go back to the ethics. And I've got, how long have I got? I've got 3 or 4 minutes. So I'll go a little bit further with some of the baggage that I'm bringing to the classroom here, that I'm using to cheat with my answer to this exercise. What I'm bringing to the classroom, my baggage, is called PICO. And I want to put PICO on your notes somewhere, so I'm just trying to think how it's going to fit. I think I'm going to do it like this, quite small. PICO or PICO. So I'm just going to bring this up. So the ethical guidelines that are required by accounting bodies all around the world are professionalism, integrity, competence, confidentiality, and objectivity. And the main reason that I'm giving the answer that I am, which is ask if you can have support from elsewhere in the organisation to solve the problem as regards my insufficient knowledge, is the obvious thing that I want to do the job myself, but I need some help. So, you know, the reason that that is the right answer feels very natural in the positive. So I want to, you know, I've been asked to do this job, I want to do it, I just need a little bit of training, give me the training and then I'll do it. It's very positive that we're choosing that as the option. But what we can do is show that the others are wrong by referencing the breaches of PICO as we work our way down. Advise the client the deadline will be missed. I mean, that's really unprofessional. You might have to do that, but in the first instance, you know, just turn around to the client and say, sorry, I can't do that. It's like giving them a flick of the wrist. You can't go around doing that. Ask a family member who is qualified accountant to do the work. That's a breach of confidentiality. No, don't be daft, you can't do that. That's a, you know, that's another slap in the face of the client. I'm going to show your secrets to someone else. No. Do the job to the best of your ability and submit the work to the client on time. It does sound kind of positive. I'm going to try my best. But hang on, if you have insufficient competence, then you're gambling on the quality of the work. No, that is also unacceptable because it is a breach of competence. Great, excellent, and I am happy with that, which means therefore I'm going to start winding up before I go next door to the next studio and talk to the level 4 guys about their advanced accounting over there in the next studio. So I think what I'll do is I will go big me and talk to you for a second about what I've done so far. So my name is Martin Jones, and as you can see, I love AAT. I have been proving this for the last hour by doing 2 level 3 papers, both financial accounting papers. I always find these codes very difficult to say. The first one was advanced bookkeeping, and the second one that I've just finished and is closed behind me was called final accounts preparation. Both of those papers have a great deal of crossover, so it does make sense to do both of the papers together. But don't do them on your own, do them with support. Go to the AAT website, my AAT website, and download the practice papers. The practice papers is what we have been looking at over my shoulder, hidden on the slide behind this brand, and I would recommend that you do all of the tasks there, including the one that I've just done with you on ethics and double entry. So I am going to wish you very good luck with your studies. I hope you have great success with AAT. Good choice, by the way. AAT is a wonderful way into accounting, and from there you can develop your career into finance or management or wherever you want to go. So good choice. AAT is the way to go. You've done very well there. Thank you again for listening to you. Thank you again for listening to me. My name is Martin Jones. This is the London School of Business and Finance. See you soon.